Hello, and welcome to another episode of the US Market Open. My name is Rufas Kamau, Markets Analyst at FX Pesa. So as always, I'd like to begin with a mic test. So if you can hear me clearly, kindly type hi on the live chat, and I'll be checking on that. And this will confirm that everything is working just fine. All right, so let's proceed. Hello, Leah, and thank you for your response. Hello, Mkuu Ndenge. Thank you for your response. So as we all know, today is quite a busy day. The markets have been quite silent for the better part of the day. But since the London Open, we have seen some volatility happen in major pairs. Also in stock market indices, some volatility happened during the London session, and also for other assets within the stock market. So let's begin by first focusing on the dollar index. So the dollar index has been quite strong, indicating a very strong bullish movement in the dollar. So the most recent rally represented a good hype. We saw the dollar index testing a major resistance level here. And on this resistance level, after breaking this level, we managed to see a new 20-year high in the dollar index. And this happened just yesterday. So by breaking this level yesterday, this was a new 20-year high. We have not seen the dollar being that strong in over 20 years. So since then, after breaking this new level, the dollar index weakened, went back here, bounced and traded all the way to the end of the day at around this level. So since then, if you look at the opening, it opened with a gap down, closed the gap, and then eventually pushed back down, retested this particular trend line before bouncing towards the upper side. So clearly, it seems like the dollar has been quite neutral, better part of the day weakening and now strengthening. So at this part of the cycle in the market, it may imply that already lower prices have been tested and rejected, and now we could be seeing the dollar continue strengthening against other currencies. So the dollar has been a major contributor in market movements, strengthening against the euro. We have seen the dollar strengthen against the pound, against the yen, among other currencies. And also it has been strengthening against commodities, against oil, against gold, silver, and also against the stock market indices. So let's look at a set of assets that we majorly trade. So we'll be focusing on major currency pairs. We'll also look at the stock market indices, as well as two major commodities, that is gold and oil. So first, let's look at the pound USD. So the pound USD was on a very strong bearish momentum, and this was on Friday last week. So after hitting this major resistance here, I'll try and zoom out just to give you a perspective of what was happening. So the pound was moving downwards for the last couple of weeks against the dollar, basically representing a very strong dollar. So upon hitting the lower trend line here, went back up, following a particular pattern here. So you can see the pattern where the pound was losing and then gaining, losing, gaining, more or less like a rising wedge, hit the top resistance here, which can be confirmed on these two edges. And then immediately after these, you can see the sharp drop that happened after that. Now, you can notice that since yesterday, it's attempting to form a similar pattern, another rising wedge, where it's moving towards the upper side and then down and then up and then down. And it seems to have broken on the 15 minutes chart. So from the 15 minutes chart, we have a much more accurate representation running from this low. The pound gained all the way up to this point, went back down, up, down, and then all the way up, bottomed here for the day, went to the top of this point, and then all the way down before breaking this level here. So there is a good chance that the two red candlesticks indicate a strong break towards the lower side, and there's that potential that we could see the pound continue to lose for the rest of the New York session as the dollar strengthens against major currencies. So this is a potential expectation that the pound could continue losing, and our potential target would be yesterday's low, somewhere around 1.16477. So If you have any questions or requests on an asset that you would like us to analyze, then you can always raise that question in the comment section, and I'll be responding to that directly. So feel free to raise your questions and I'll be responding to those questions directly. So hello, Charlie Genius, and welcome to the session. Hello, Kevo Kaiser. Welcome to the session. I always appreciate when you guys join in and also participate in the session and also provide engagement to help the conversation move forward. So going forward, we have seen this is the rising wedge that was shaping in the pound on the 15-minute chart before breaking here. So there is that potential that we could see the pound dropping all the way down to 1.16477. So before we proceed, these are not trading signals, it's market analysis to help you gain this information and skill. It's not trading advice, nor is it trading recommendation. So risk management should be practiced at all times. You must do due diligence and perform your own analysis. So going forward, we have the USD trading against the Swiss franc. So we had a very nice bullish momentum happening here on the 1 hour chart. So it was very easy to track, spot, and identify value areas. So also on the lower side, very easy market to trade. So was consistently going up for quite a period of time, indicating higher highs, higher lows, and very nice momentum. So this happened for a while before the market entered into what looks like a triangle. So if you look at the sequence of highs from this high to this high and then this high, you'll notice that the market started moving downwards. And then also if you look at the lows from this low to this low and then this low, it was more or less like the market was trading within a triangle. So what happened is that the market broke towards the lower side, indicating a breakout to the lower side, which did not continue after that. So it can be summed up as a fake out. The market went back into the pattern and then broke to the upper side. Immediately after breaking to the upper side, then it entered another sequence or level of consolidation, which also seems to be a triangle, especially when you visualize these on the 15-minute chart. So the triangle basically follows this particular path. So you can identify the swings from this low to this high, and then low, high, like that, eventually breaking earlier today. So you can already visualize this kind of movement here. And then after the breakout, the market accelerated all the way up, found some resistance here before pulling back down. So the resistance or the day's high seems to be 0.97221. The market pulled back down to this area here, and then up, and then down, up, down, up. So right now it seems to be quite noisy, doesn't seem to have a very strong directional movement. So in a break above the current price level might represent a continuation of this breakout. So the current 1 hour candlestick is very interesting. So if it happens to break and close above this area, 0.97221, then it will be confirmation of the continuation in USDCHF bullish momentum. So very interesting price level. Also, if you zoom out, you would notice that we have also broken another major level here. So if you look at these, then the price action here represents a very strong breakout. So from this high that we saw somewhere around the 15th of June, followed by another high here that we saw somewhere around the 14th of July, then it's basically a clear indication that that trend line has been broken. And I'll try and zoom in just to give you an idea of how the breakout happened. So the market was on a very nice rally, found resistance here, went back down, entered into this particular triangle. And then the breakout of the triangle also happens to the breakout of the trend line here. So the strong green candlestick is what represents the direction of the breakout. And now we are looking at potentially a market that is looking to run away towards the upper direction. So the breakout was strongly represented by the green candlestick here, and it could continue maybe towards the end of the week. So a very interesting perspective in US dollar against the Swiss franc, where there was a breakout on Monday, and this breakout could continue pushing higher, indicating that the dollar is very strong against the Swiss franc, and it's a trend that is expected to continue. So on last Friday, as we all remember, there was the Jackson Hole Symposium, And there was a speech by the Fed Reserve Chair, that's Jerome Powell, where he was talking about monetary policy, and he mentioned that the number one priority for the US Federal Reserve Bank is to control the rising inflation. So the way they do this is by implementing a major monetary policy tool, in this case, hiking interest rates, which is something they've been doing consistently for the last couple of months. So going forward, we're expecting that Jerome Powell will raise interest rates by 0.75%, and this is on the September meeting. So if the Federal Open Market Committee votes to raise interest rates, then we could see a stronger dollar and continued movement here, targeting even higher prices. So with this in mind, since investors are already expecting it, then we might see investors pricing in this information before the actual meeting happens. So for now, today, it seems bullish. And if we break this level, we could see some further bullish momentum. So for now, I'm expecting to see a stronger dollar across board. So a similar case has been happening on USDJPY, a triangular kind of formation, which is basically a sideways momentum, what we refer to as a consolidation. So the market consolidated last week for about 4 days before breaking out towards the upper side on Friday. So immediately after the Jerome Powell news on Friday, market closed here. Yesterday, market opened here, rallied all the way up, pulled back down, and then up and closed here. So today, if you look at the candlesticks, they have been attempting to move back down. But if you focus on the tails, you'll notice that we have longer tails on the lower side, indicating rejection of lower prices and entry by buyers. So if you look at a smaller time frame, this is the 15 minutes chart, then it's quite clear that there has been some form of resistance that has been playing in these markets somewhere around this area here. So I'm sure everyone can be able to visualize this information here. And also, if you look at the lower side, it's quite clear. It's clear cut. The market has been using this as the support. So just by combining the lows and the high, then we have a flag. So in a flag kind of formation, the market will first form a strong directional movement, which can be described as a flagpole. So right from this bottom here on Friday, all the way up to this point here, yesterday, may represent our flagpole, and then the flag is formed via this trend line. The market is moving up and then down, up, down, along two two parallel lines. So in a flag kind of formation, you're always looking to trade the continuation because it can have a bigger impact on your position. So in this case, if the market happens to break out, let's say towards the upper direction, then it would be a signal to look for a bullish position and target even higher prices. So it's also possible that the market could, let's say, drop and break the lower trend line, and this could signal a reversal and maybe a short selling position. So a very interesting area to observe going forward. While you are trading the USDJPY 15 minutes chart, we could see the market breaking towards the upper side, and this could represent a potential buying area, let's say somewhere around 138.612 price level. So a very interesting area to look for a trading position. So that being mentioned, we keep on going forward. If you have any question or markets that you would like us to focus on, then you can always type that, and I'll check that out and see what we can do with that. So hi, Michelle. Welcome to the session. Hi, Caleb. Welcome to the session. Antonio Thiambol. Is it too late to enter £34 USD? I'll check on that. Information on gold. Definitely, we have to go through gold. What caused the random abrupt bearish movement last week, Friday, on USDCHF and USDJPY? So last week on Friday, as already mentioned, there was a speech by Jerome Powell on the Jackson's Hole Symposium. You can always Google that. You will see the key points that were made and highlighted about economic policy with a focus on raising interest rates to control inflation. So he mentioned that the priority is controlling inflation, not maintaining full employment. So even if the job market is slightly worse in the next week, sorry, not next week, but this Friday, this is when we are expecting the NFP jobs data, the Fed is still committed to raising interest rates in order to control the rising inflation. So this is a part of what strengthened the dollar last week on Friday. So yesterday, we started seeing some correction but today it seems like the dollar is continuing with the original direction. What's your outlook on oil? Thank you for the question, Charlie. I'll be checking on that too. So going forward, AUD USD, this is the Australian dollar trading against the US dollar. Let's start with a higher time frame. In this case, we are looking at the 4-hour chart. So clearly, you can see that the market was on a bearish momentum for quite a period of time. So it seems like the market was following this particular path. And if you look at the support here, seems like the market was making some major swings up until this bottom. So we can say these stretches backwards, something like this. The market was going up and then a swing down, a swing up, a swing down, and then a swing up before breaking the trend line. So after breaking this particular trend line, you can see the trend that was followed. So market breaks towards the upper side, does a lot of confirmations. You can see the first retest, second retest, third retest, and now we have a very solid area that seems to be serving as the support area for this particular market. So in this area, you can see there is a lot of retest. Market goes back down, doesn't break, down, doesn't break. And then it seems like the Australian dollar is finding a lot of support right there. However, if you look on the other side, and now I'm going to the 1-hour chart, you'll notice that there is a resistance that is forming here. So the market is unable to form higher highs. It's clearly forming lower highs. So from this high that we saw on that particular week, last week, and then this week, it seems like the momentum is dying somewhere along this area. So technically, more or less like a market that is quite noisy, but also a market that is also choking out. So if you look at the most recent lows here, and I'll try and combine them here, you will notice this kind of thing that is happening where they are getting more level. So previously, the lows were strongly getting lower and lower and lower over time. But then if you combine these lows, they are more or less like on a level ground. Basically indicating a market that is choking out, and we could be seeing a breakout anytime soon. So here is what we have. The last couple of days, the Australian dollar was just rising along this trend line before getting to the upper trend line. So if you look at the lows, they were following some path around here. So market hits the resistance, drops sharply, gets to the support, and then back up, down, and then up, finds resistance, goes back down. So quite a noisy market for me. I wouldn't recommend a clear-cut direction in this particular movement. So I'll probably wait for the market to hit a major level. This could be a major resistance level, such as this particular resistance here, or even a major support level here, so that they can make some assumptions about the market. For now, it's quite a little bit too noisy for me to identify a key trading level based on the current prices that we are seeing. So notice on Friday, sharp drop, Monday rise, today drop, rise, drop, way too much for me. So moving on to Euro USD, you can see that since yesterday, so this was the price action on Friday, dollar strengthening against the euro, kept pushing lower way below parity. So the parity level is somewhere around the red line, 1.0000. The red line is 1.00005. So from here, market rises. This was yesterday, and then enters this triangle, trades within the triangle before breaking towards the upper side earlier in the day. So after breaking towards the upper side, and this was earlier in the day, you can see what followed. This is on the 15-minute chart. After the breakout, the market continued pushing higher, found resistance, and now has been attempting to go back up before pushing a little bit higher. So for now, if you focus on the dollar index and what is happening, after bouncing here, attempted to go up, and now the current candlesticks seems to be pushing back down, but all the more, it seems like the dollar index is strengthening. And with the strengthening dollar index, we could be seeing the dollar strengthening against the euro, and we could see a reversal of the entire morning move. So this was the morning move where the euro was gaining against the dollar. So now if the dollar strengthens, then we should be seeing a drop, maybe perhaps towards the daily low. So the daily low is the lowest price that we have seen since the opening of the day. So somewhere around 0.99814. So there's that potential. You could see the current price dropping down to 0.99814. And this is pegged on the potential of the US dollar starting to strengthen against its peers. So as for US oil, it's pretty clear. It was rising very well. This is on the 1 hour chart. So from Friday, but managed to bounce from the lower trend line. So you can see the point here versus this point on Friday. Sorry, yes, this was on Friday. So bounced here, went up, and then yesterday managed to rally all the way up, found some resistance here. So today, strong momentum downwards. After this strong momentum downwards, I had done some analysis earlier in the day. I was expecting the oil prices to drop all the way to the lower trend line so that I can identify a potential buying point. So remember, oil is a very simple asset to analyze. You mainly focus on the supply versus the demand side. Demand side is equivalent to economic activity. So when economies are operating at full scale, then demand for oil tends to be very high. So if there's a high manufacturing, there's a high number of jobs within an economy, then demand for oil tends to be very high. So currently, especially for the US economy, there's a lot of economic activity happening. Companies are doing well, jobs are at top level. People have a lot of jobs, and this basically represents economic activity. However, when you look at the supply side, oil is still facing a lot of challenges with supply, especially considering the cut from the supply of Russia. So without the Russian supply of oil, then the world has had to rely on a much smaller amount of supply. So when you focus on the rest of the producers in the market, including the US itself, and also including the OPEC plus countries, you will realize that they are quite reluctant to expanding oil output because they are already enjoying higher oil prices. So with the OPEC plus countries threatening to reduce oil production in order to maintain higher prices, then I would remain very positive about the oil outlook. So I'm still very bullish on oil. It's all about finding the right price to buy. So with the current prices going down, I'm talking about the last 1, 2, 3, 4, 5, 6. So the last 6 hours, oil has been consistently pushing back down. And now if it gets to my buy area, then I'll be looking for signs of bullish entry. So if I want to see a candlestick such as this one, a pin bar such as this one, happening somewhere along this area here, then I would be very happy to look for a buy position, targeting even higher prices. In this case, betting that oil prices will continue to rise in the near future. So oil just broke outside the trend line. So we had a period of time where oil prices were adjusting towards the lower side. So this was about 12 weeks where the oil prices were consistently going back down, right from a very strong area of $120 per barrel. So having bottomed somewhere around $86 per barrel, we saw the breakout happen here and a very strong pin bar. So you can see the strong pin bar. This happened on the 4-hour chart. That was early last week. Since then, there has been a very strong rally pushing back down. If you compare this high with this other high, it's getting higher. This week's high is also higher, indicating that oil is forming higher highs. The lows are getting higher. So this pullback might be very welcome into looking for another bullish position. So a very interesting area to look at 92.623. So if oil gets to at 92.623 and we start seeing bullish momentum, then that could be an idea to go for a long trade. So still checking to see if there is anything I missed. Gains Food, hello and welcome to the session. The card effect on oil. We know that the Canadian dollar is a commodity currency. So if oil prices are strengthening, then you also expect the Canadian dollar to strengthen. So now that you're seeing these and the US oil is rising to the US dollar, then you might notice something similar. The dollar is strengthening against the Canadian dollar. So dollar, in this case, strengthening against oil, and in this case, is also strengthening against the Canadian dollar. So at some point, when this changes in oil, then we might see something similar happening in a USD card. So there is often a very strong correlation between the two. So moving on, we get to gold. Gold has been quite consistent on its bearish momentum. So if you just go to the 4-hour chart, you will notice that it has been on a very strong bearish momentum. And this is ever since hitting an all-time high. Of course, it's not an all-time high, but it was a multi-year high. So since then, we've been seeing gold being very persistent in the bearish momentum. So let's use the forward chart. Kind of easier to draw a trend line on a smaller time frame. So I always try and do this. So this is what we are seeing in gold. So price has been oscillating between two trend lines. So from here, goes down and then up, and then down, up, down, up. So there was a slight break in the previous swing, indicating that the strong momentum here was hard to beat. So there was a pattern within a pattern. So if I zoom out here and then we look at what was happening here, there was some form of rising wedge pattern happening around this area. So the rising wedge was following this path and also this other particular path here before the market broke out towards the lower side. So this is what we were having, and this was some time back, about 2 weeks ago. So since then, notice that the market broke towards the lower side, accelerated downwards for a week and a half before pulling back down for like 3 days and then continuing to push down. So we have seen a strong momentum yesterday, followed by some shooting star. So this is the candlestick I'm referring to, the shooting star here, indicating a strong rejection of higher gold prices. And since then, you can see that oil has been persistently attempting to push further down. So a very interesting price level in gold, especially when you consider the longer term direction here, where price is consistently going down. So sometimes when price is going down, doesn't have to do so in a very straightforward way. Sometimes it can be quite hectic, but you have to be very patient with it. So for instance, after the break here, a straight up week, the following week, the market goes the opposite way. So if you panic and you get out, then you don't get to enjoy the entire move. So late last week, market changed direction, dropped all the way. Monday, there was a drop early in the morning before the market changed direction. Found resistance here today. There was no attempt to go up. It was just one candlestick, and then the market straight up started going downwards. So if you look at a smaller time frame, and in this case, I'm looking at the 15 minutes chart, right? After we have just entered the New York session, you will notice that the market is trading in a flag, and it's quite consistent with other markets that we've been observing today. So with this particular flag, we identify these as the flagpole. This is the strong acceleration yesterday, and then the flag is formed by the two parallel lines, and the market is just simply oscillating between the two, or we can basically describe these as an area of consolidation. So as a trader, technical trader, you just want to observe whether gold breaks the upper side of the flag or whether gold breaks the lower side of the flag. So since my bias is on the bearish side, I would prefer if there was a break towards the lower side. In this case, I would trade downwards, targeting the previous low. And this is yesterday's low, somewhere around 1720. And also, if that level is broken, then we could head lower. So with a longer term perspective, then we have a potential bottom here that happened last month in July, and this is around 1680. So a very interesting area, especially if gold was just to plain lose momentum to the dollar. So a sharp drop could happen around here. However, on the contrary, I'm not always right. Sometimes I'm wrong in the market. And if in this case I'm wrong and gold breaks towards the upper side, then a potential target would be yesterday's high, and this is a price level of around 1745. So if it manages to rise all the way to 1745 and continues rising higher, then the next target will be that day's high, and this was experienced at 1765. So sorry for that. So potentially, if it's a break higher, then a continuation of the yesterday's trend, so 1745 as a target. If it breaks 1745, then potentially we could see gold go all the way up to 1765. And these are price levels somewhere along the trend line here. So if you zoom out or even go to the 1 hour chart, then you can see there's a major resistance here. So a very interesting way of analyzing gold, especially when it's trading along inside a flag. So at some point, we know it's inevitable, gold will eventually break. And most of the time when gold breaks outside of such a formation, then there's often a very strong momentum in one particular direction, and it could represent a trading opportunity. So US 500, this is the S&P 500. had a very good run, lasted about 9 weeks. If you count here, 4, 5, 6, 7, 8, 9. 9 weeks, the market was just going up and up until it hit the upper trend line. The upper trend line is something that started on January. So if you look at the first day that we saw this high here, this was the 4th of January early this year. And it was an all-time high for the S&P 500. So then somewhere around 29th March, this is where the S&P found another high and then dropped all the way down before going for the 9-week rally that ended here on the same trend line. So since hitting this resistance, you can see the sharp drop that followed afterwards. So market dropped sharply that week. Then last week opened here, dropped before rallying and then dropping later towards the end of the week. So for those who are asking about Friday, so when Jerome Powell mentioned that he is focusing on controlling inflation by raising interest rates, then this is a quantitative easing reversal, or what we call quantitative tightening. So with monetary tightening, we're expecting stocks to be weaker across board. This is how the market reacted on Friday. So since then, you can see that markets opened with a gap yesterday, a gap towards the lower side, attempted to close that gap and close towards the end of the day before ending the day here. So today, the market attempted to go up before reversing direction. So if you use a smaller time frame, then it seems like we have some form of flag that seems to be widening. So this can be used to map the flag at the opening of the gap, this high here and this high here. And then if you look at the lows in the market and then you combine them, then the market is still trading within formation. So if the market happens to break this particular formation and close lower the or below the trend line, then that would be a signal that we are going for continuation. And this is basically an inverted flag. So with other markets, we are seeing a flag. This is an inverted flag where the flagpole is on the upper side. We have the two trend lines here being obeyed by the S&P 500. So a potential break here would basically mean that we are going further downwards. So for the US Tech 30, seems like it's the fastest one. So the breakout has already happened. So potentially a position could be squeezed in towards the lower side. So this is what we are seeing. So from the lower side, just a moment. Not yet. So if you look at this low here versus this low, now the market has more room for some further downside. So we cannot say it's a confirmed downside break. So we just be patient, remain patient, and hopefully the market will break the lower trend line and confirm a bearish momentum. So for the US Tech, this is the NASDAQ 100. I think is the same story on the 50-minute chart. Notice that the three indices can be strongly correlated. So this is what we are seeing here. And also this is what we are seeing on the lower side. So it seems like the NASDAQ is bouncing. So if it bounces here, then the market remains within formation and you just have to be a little bit more patient. But then if there is a straight out break, then you go for a bearish position if the break happens to be on the lower side. So also something to consider, if the break happens to the lower side, then we'll be looking to short the market. If it happens on the contrary towards the upper side, then we'll be looking to go long on the market. So I'm hoping I've answered all your questions and gone through all your suggestions. So just going through the comment section yet again to make sure that I confirmed everything. So there was a question, is it too late to enter a trade for pound USD? So let's see, where is pound USD? It's right here. It seems like the market has bounced. So it's as mentioned, today is quite a crazy day where initial trends tend to be changing very quickly. So here it was an idea to go for a short selling position. Notice in the last 1 hour, the market has completely reversed. And now we are looking at a potential continuation of activity within the pattern. So this is what we may describe as a force break. So in a force break, you exit the position quickly and then wait for the next break. So let's see. Dollar index bounces strongly, gets up and then pulls back down, hasn't closed yet. The candlestick in the 1 hour chart has not closed yet. So you might want to remain a little bit patient. So it's the same case with pound USD. if you look at the current candlestick, seems to be going back in formation, but we still have time. Right now it's 4:34. We still have 26 minutes. So you might want to be patient and wait until the 1 hour candlestick closes. So the USD Swiss franc, similar thing happening here. So USDJPY seems to have bounced on the upper trend line within the pattern. USD CAD, strong momentum, where the dollar is gaining against the CAD, which we have equated to the strong the strong weakness, or we can say the weakness in oil without using the word strong. So oil has remained weak for the entire session, basically indicating that the dollar is very strong and oil is weak, and the acceleration towards our potential area 92.623 is still happening. So with gold, potential breakout either to the upper side or to the lower side will represent a trading opportunity. So US 500 trading at a very key level, so a breakout might be something we are observing. US 30 the same, US Tech 100 or the Nasdaq 100 also doing something similar. So basically, the question about Canadian dollar and oil, if oil prices are strong, the Canadian dollar tends to gain against other currencies. And if oil prices are weak, then the Canadian dollar tends to weaken against other currencies. So good question here from Caleb. And hello, Tony, welcome to the session. Please explain how the NFP is affecting the dollar this week. I think I've already done that. The non-farm payrolls basically represent the job market data of the US. It's released monthly every first Friday of the week, of the month, sorry. So the first Friday of the month happens to be this week. So on Friday, the 2nd of September, we'll be having the US jobs data report. So if the jobs data report is very strong, meaning that there is less unemployment, then the Fed will have more room to hike interest rates in order to control inflation. And in that case, it might strengthen the dollar, because when you hike interest rates, the dollar becomes scarce. So loans become expensive and people tend to use more money to repaying their debts. So they are left with less money to spend on consumer goods and products. So in that case, the dollar weakens. So on the other hand, if the job market is really bad, and the report indicates worsening economic condition, then the Federal Reserve Bank of the US might be a little bit lenient with the interest rate hike. So the Fed might do a smaller hike, maybe 50 basis points or 0.50%. In that case, the dollar may not strengthen as much, but it will still strengthen. So a good job rate would be good for the dollar. So if the unemployment rate remains smaller and smaller or within expectations, then we'll be expecting to see a stronger dollar. So the thing is, investors are not looking to wait for that particular moment. They're looking to price in the information. So remember, whenever you know something, you have some information, you tend to act on it. So in this case, if the people are have a very strong expectation that the job market is good, then they will be pricing in a stronger dollar by buying the dollar and then selling the dollar immediately after confirmation of the news on Friday. So for the rest of the trading week, we could see a continued strength in the dollar against other currencies. And this could have a substantial effect on trading, where opportunities could appear, where you pair the strong dollar with the weaker currencies. And this can be very beneficial to you guys. So thank you very much, everyone. Thank you for your time. Thank you for your participation. I hope to see you on the next session. So before I leave, I would like to mention that the Novice to Pro series is still continuing. It's available on the FX Pesa YouTube channel. So if you're a beginner and you're trying to learn how to trade, then the series is designed to help you transition from a novice to a pro within a short period of time. So we have already done 6 episodes right from the introduction to trading all through to market strategies. And on the next episode, next Monday, we will be focusing on risk management. So if you're available, just make sure that you register, you book for that, set a reminder, and then hopefully you're going to get to gain more on that. You can share with your friends. So if you have any friends who are looking to learn how to trade Forex, it's free of charge. You just access the series and use that to their advantage. So Thank you, Michelle. Thank you, everyone. I hope to see you guys on the next session.